And for those of you that don't know me, my name is Gareth Soloway. I've been trading the markets for about 20 years at this point. I started in the late 90s with the dot-com bubble and kind of witnessed that collapse. And then, here we are 20 plus years later with cryptocurrency and everything. We'll talk about that, what's going on there. But basically, there's nothing special about me. I want to be that to say that and make that clear. I started in a lower income family. Both my parents were teachers, and I was never exposed to investing until high school when I joined the investment club. And it just so happened to be in those late '90s periods where my fake account of $100,000 I was able to make into $200,000-300,000 in a matter of a month, and it was so addicting. When you don't have that type of money and to be, even though it was fake, to have that the ability or think that you can actually do that in real life, it's very addicting, as many people find out in the cryptocurrency space these days. So bottom line is, I went on my merry way, and I was dedicated to learning how to trade, to read the charts. Initially, when I started, I had no clue. I had $10,000 to my name. I got leverage 5-to-1, so 50,000 to trade from a firm. And I lost lots of money. My 10,000 went to 7, to 6, to 5. I worked 3 side jobs to replenish it many, many times over the course of my beginning years. And then finally, I got the hang of it. And I finally turned that corner, learning how to read charts better and better, learning what probabilities were, learning how to kind of control your emotion and become more disciplined.
So let's maybe start with the, S&P 500. Have we reached a bottom, or is this just a dead cat bounce taking place right now?
So the big question is, right, when we talk about bottoms in the market, unfortunately, we're in a period of time where the Federal Reserve is in total control of that. And what I mean by that is that as long as they were printing the massive amounts of money that they were, the markets just went up and up and up. And yeah, you had the COVID collapse on panic right here and everything. But if you go back to 2009, we were kind of stuck in this sideways upward sloping channel as quantitative easing was going on. And remember, quantitative easing started in 2009 with the Great Recession end, and it basically continued all the way through. And then right here, so this was a taper tantrum right here on the chart. So this is where the Fed threatened to raise rates. The market dropped 20%, and then they backed off and they went back to printing money. And then here was where COVID, it made it seem like the world was going to end. I mean, we didn't know what was going to happen, and you had this major decline. From that major decline, they printed more money than they ever have before. And then what you could see here is fascinating. We've actually come back to that upper range, and notice how the market is bouncing right there. Mm-hmm. Now, unfortunately, I think this is just a bounce, meaning that maybe we go up another 100 points on the S&P, maybe a little bit more. But if the Fed is truly pulling all the stimulus away and sucking money out of the system by raising rates, it makes a lot of sense that we should start going back into this longer term trend at the very least. So of course, you're going to have support at the high end, but after that bounce, you probably trade back inside that range. And then at that point, we'll have to see where the markets bottom out. Again, a lot will have to do with where, do we see a recession? Then the markets probably go even lower. But if there's no recession, my target on the S&P, or this is the Spiders, which is an ETF that tracks the S&P, would be this former COVID high pivot, right? So this is just before the COVID panic. And then look at how the markets just seem like they want to go back to that level. It's also in the midpoint of this longer term channel. So just some cool ideas and some cool charting for you guys to kind of check out. I love kind of showing people this, because a lot of people think technicals are just a bunch of nonsense. And then you look at the charts and you're like, wow, that really did bounce right at that level. And it's just very cool stuff.
Do you think that the Fed is going to capitulate at some point? And if so, are we done with the V bottoms? Or is it going to be more of a process to maybe form these bottoms, or will they capitulate, do you think?
Yeah, so I think that the Fed is now has an issue, right? Yeah. In the last 20 years, there was basically no inflation, maybe 2%, 1%. I mean, that's what they were reporting anyways. So they didn't care about printing money anytime the market needed or the economy needed it. The problem is now you have 8.5% inflation, and that is very, very high. So they can't go right back to printing. What I do think will happen, though, is that they're going to continue to raise rates and be aggressive and try to bring inflation down. Later in 2022, early 2023, the likely scenario is the economy is going to start to sputter. It's going to go into recession. And at that point, you're going to see unemployment start to rally. Inflation has probably come down at that point to like 5%.
Let's hop now into crypto, more specifically Bitcoin. Want to get your take there. You made a pretty bold call. I believe it was to 20,000, but now it's potentially even lower, correct?
Yeah. So back when it was, in October, November, I talked about how, everyone was so bullish on crypto and talking about how it was going to go to 100,000 by the end of November and then 250 by maybe December 31st. And I just didn't see the charts telling me that. The chart was a classic double top. It pierced the recent highs from April. In fact, let me bring that chart up now so we can kind of take a look at it. But that's very normal for double tops to do. And I want to be clear on this, is when you have this double top in March and April, and you got just briefly above it, the markets do that. If you look at double tops, they almost always breach on the second high. And what's going on there is the second high is where euphoria is even greater.
Maybe let's add on to that a little bit with your process then. Being that technicals is important, right? I always say that it's not really to predict what's going to happen. It's to prepare you and give you better risk to reward trade. So what is it that, maybe if you can walk us through your process a little bit, maybe on the day-to-day, or what time frames, or, get a little bit more in depth there, what takes place?
Yeah, and you're so right. I mean, I think that's important, is like, there's plenty of times where technicals fail, right? So there's no perfect magic sauce where you can never lose on a trade. I lose on trades all the time, but what I found is that by using the knowledge that I have on technicals, I'm able to put probabilities in my favor. So if you can get to 70, 80% win rate, which is 7-8 times winning out of every 10, the math takes care of itself in terms of your money. It just continues to grow. But again, it does fail, just like everything, and you have to be prepared for that. I look at mainly the daily chart. For me, as a swing trader now, for day trading, you look at the intraday. I usually go the 10-minute and the 60-minute, but for swing trading, which is holding a stock for days to weeks or months, usually less than a year as a swing trade, I'm going to be focusing on the daily chart and looking for major pivots, gap fills, double tops, double bottoms, bottoming tails, like all these kind of terminology things that you hear. They're all things that put the odds slightly in your favor. And what I found is that when you find a level on a chart where you have more than just one of these factors, let's say you have a bottoming tail and the tail happens to coincide at a gap fill, the odds increase, right? So the idea is that one factor or one signal may give you only 50, 60% success rate, not that great. But if you can get 2 or 3, you're pushing yourself towards 80%. When I was a young trader, I always thought I was invincible, right? And I would go into a trade and not even think about the money. I'm just throwing as much as I can, because a young trader, a new trader, thinks that they're going to be right? You haven't been burned by touching the hot stove yet enough times. And now I've gotten to a point where I've been wrong enough in my career, and I've taken big losses in my early career that really decimated my portfolio, to where I say, okay, before I even enter this trade, when I'm just watching a trade, what is the total amount of money that I'm willing to commit to this trade, right? So is it 100,000? Is it 50,000? Whatever it may be, you figure that out ahead of time. And then when it gets to that first level and those factors, what I'm doing is I'm usually choosing a percentage of that to initially put into the trade. The key is, in my old times, I would have gone in right away with 100,000. And then when I'm wrong, I would have said, well, I guess I got to put another 100,000 in. And before you know it, if that trade doesn't work out, it becomes a blow up scenario for your portfolio.